But I first do want to get some reaction from Frances Donald. I had promised that she'd be joining us here. She's the Chief Economist, Manulife Investment Management. And Frances, I will go through some of the specifics of these numbers under the headlines. But what's your initial reaction to the Canadian jobs numbers?
It's devastating. It doesn't matter that economists put a 4 million figure on what was expected. This is the largest employment shock in Canada's modern economic history. It absolutely dwarfs any recession that we've seen previously. And keep in mind, this is one survey. It's the labor force survey, but we already know that 7.5 million Canadians have applied for the CERB. So this number is not going to reflect just how painful this employment environment is for Canadians. So to say it's better than expected tells me that a survey number produced something that is a little bit different from economist expectations. It doesn't change the fact that we had 19 million Canadians employed in February, and 7.5 million of those, so 40%, have now applied for the CERB. That is a better indicator that tells us just how painful this environment is. I've also had a quick second to look through some of the underlying details, and there are vast differences across cities. Montreal is producing an 18% unemployment rate, Toronto at 11%. So you're going to see very large divergences across the country. If you're looking at this number and saying, how can this not be as bad as we thought? Keep in mind that we have a lot of data points that are giving us a slightly different picture. And unfortunately, it's not a positive one.
And so when you take a number like this and you try to figure out what the road ahead looks like, I mean, most of our time these days is spent, Frances, asking questions around, well, when can we go back outside? When can we know that the worries surrounding COVID-19 have died down enough that we can go back to some kind of normalcy? It sometimes feels like a near impossible question to truly answer unless any of us are health experts. What about for economic experts? I mean, can you look at these numbers today and does it give you any clarity on where we might be in the next few months?
Well, when I look at this number, I think about a few things. One of it is that this number is actually lagging. It tells us where the job market was in the middle of April. And we know from more frequent high-frequency data like daily and weekly data that the worst of the pain of COVID-19 on the economy actually occurred by mid-April. Now, that doesn't mean the economy suddenly bounces back in the second half of April. No, it just means that it deteriorates at a slightly slower pace. So economists would say the second derivative is improving after that fact. So we know that at this point, we're going to continue to lose jobs each month, but the bulk of those job losses were probably in April and somewhat in March. So continued deterioration, but at a slower pace. Now, when does the economy come back online? Yes, it is a health policy question. It is a political question. When do our politicians decide to press the button? But most importantly, it's a question of human behavior, because we can open our salons and we can open our coffee shops, but if people are not willing, if they're not able to use those, whether it's because they don't have childcare, whether it's because they suffered a financial shock, or they're just concerned for their personal safety, no matter what they read on the news, then we aren't going to have an economy come back to life. So we have to meld together a lot of disciplines here to get a sense of when these jobs come back full time. And what worries me most is that what we've seen in these numbers are services-based jobs coming off. And that's going to depend, reinvigorating those and bringing them back online is not going to be like pressing a button that gets a conveyor belt going again. It's going to be about confidence. And confidence is an incredibly difficult thing to stoke in an economy, particularly with an issue as complex as COVID-19.
Well, you talk about that services sector. I mean, we cover it every day here at BNN Bloomberg because you've got all these companies that are tied to it. They've got restaurants, whatever it may be, and they're just trying to figure out when they can get back to some kind of normal. Until we know that, it's obviously hard to know what that means in terms of the full employment picture. Now, you mentioned the CERB program. I certainly was covering the financial crisis more than a decade ago. I was not covering the Great Depression, but there are a lot of people who have talked about the fact that there were lessons learned from the Great Depression in that there wasn't enough money coming fast enough to stem the bleeding. Given what we know this morning, with an unprecedented decline in jobs in this country, basically 2 million in the month of April. And given that we know that you have these programs that have been laid out, like CERB, where, as I was mentioning earlier, I mean, we're already at nearly 29 billion benefits paid out in roughly a month's time. Is that the kind of action that can keep or has kept things from getting worse?
It may have been. A lot of the government money that we've seen has largely been there to help those who have lost their jobs. So when I look at any data point, I tend to put two columns, good things, bad things. And as much as it's really difficult to come up with good things, one of them I can come up with is that a lot of these people, probably most of the people who have lost their job and are facing this hardship, are receiving some form of government assistance. So perhaps their retail spending is not going to drop as aggressively as it would otherwise. That certainly doesn't replace the confidence, the financial position of having a job. And I think that does leave a scar on us psychologically and financially, but we did receive some support there. Now, what would have been even more optimal is if we'd had those wage subsidy programs in earlier. Of course, this moved very, very quickly, difficult to do that, lots of paperwork to fill out, but wage subsidies would probably be the element of fiscal packages, not just in Canada, but across the world, that help prevent the layoff from even happening. And if the layoff doesn't happen, then we don't have to worry about rehiring on the other side. Because this month, 2 million jobs lost, last month, 1 million, we have to rehire 3 million people, and those who lose their jobs on an ongoing basis back into this economy. That's going to take us a while. That's not going to unwind, or the speed at which it unwound is not going to be the speed at which we re-put these people back to work. So we have a long road ahead of us. It's going to be an uphill battle. The more we can prevent layoffs from happening, the less of an uphill battle that will be.
If you're just joining us, we have just learned that the Canadian economy shed roughly 2 million jobs in the month of April. That is historic. We have never seen that before. It's a basic doubling of what we had seen in the month of March. And that means roughly 3 million jobs have been lost between the March and April period as Canada deals with the COVID-19 pandemic. And Francis Donald joining us here. You know, Francis, you were talking about the services part of the economy and the fact that the majority of the job loss came from that sector. Services employment down by more than 1.3 million jobs, and the unemployment rate getting up to 13%. Maybe we can dive a little deeper just into the challenges in trying to predict or forecast what numbers are going to look like these days. When we came in today thinking that we might see an unemployment rate as high as 18% in this country, we might see as many as 4 million jobs lost. I mean, I agree with you. I mean, we shouldn't be talking about, numbers that are historically bad, being something to be relatively optimistic about. Nevertheless, this number would be proportionally more in line with the job losses that we are seeing in the United States, which might be an important consideration for people who are trying to figure out how the Canadian economy is going to perform versus, say, the United States economy.
Well, one of the challenges here is that the labor force survey, which tells us our job numbers, is a survey. It's not counting exactly how many people have been laid off, so it has very wide confidence intervals. But it also tells us how many people lost their job. It doesn't necessarily tell us how many people have had their hours reduced and aren't getting the same amount of pay. And that's why, to get a better sense of the pain in this economy, getting a sense of how many CERB applications have been applied for, I think is a more relevant metric to tell us how many people have been affected. So one of the ways that you could go about predicting this type of number is to say, well, we had 6.75 million applications for the CERB until April 15th, which is the survey period for this survey. And then you could say we've already had 1 million people who applied for unemployment in March. Let's just say we're coming out between 4 and 5 million as an example. So that's probably where a lot of economists come up with their estimates. But these are unprecedented times. We do not have historical precedent for this type of environment. You're really using new metrics that you've never used before to get you a sense. Now, I do think there is some comfort in saying, look, we're matching the United States in terms of job losses, but we should be very hesitant about saying our recovery will look like the U.S. recovery. Canada is going into the job losses with a significantly lower savings rate and much higher debt levels. So the financial struggle of the unemployed Canadian average is going to be more than the unemployed American. And that probably suggests that the struggle in our economy will be more pronounced moving forward than it will be in the United States.